What the Four Corners program suggested was not that you were evading tax at all, that would have been libellous, but that you were minimising tax.
There's nothing wrong with minimising tax. I don't know anybody who doesn't minimise their tax.
And that you were doing so in ways that were contrary to the spirit of the law.
Oh. Well, I just got through telling you what I thought about that. And what you're saying is exactly what the Four Corners program says. I am not evading tax in any way, shape or form. Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads read.
That was Kerry Packer in his now famous 1991 parliamentary inquiry appearance into corporate tax evasion that he stated that he appears reluctantly. So what were the words there?
I think they said, what's your name and in what capacity do you appear before this inquiry? And he said, my name's Kerry Packer and I appear reluctantly before this inquiry. So
look, love him or hate him, it was a fantastic speech. It's like one of my all-time favourites. Geez, he gave the parliamentary inquiry a spray, and rightfully so.
Well,
so
the response that he was making there was, and that's the interesting point you make there. It was an inquiry into tax evasion, and this is probably the two clear buckets. And this is the point that he arced up about, was that the inquiry is about tax evasion, which is evading tax that you are legally required to pay. And his argument, and which obviously he says much better than me, which is that he's not evading tax at all. He was following the rules. He's following the tax law. He's minimising his tax as he sort of says we all should.
So Labor's John Langmore, what we didn't play in that clip because we didn't want it to go for too long, tried to question Packer on why his company pays only 10 cents in the dollar in tax. Now, I remember this as a boy, and I thought it was 4%. I thought it was 4 cents in the dollar. Yeah. Packer's companies had paid in tax. His point that he makes, and I firmly believe in this point, is that the rules are the rules.
Yes.
And if I can structure things where I only pay 4% tax, some of that's through employing more people, some of that's through grants, some of that's through research and development often. The rules that are created, if that comes down to where you can legally pay the least amount of tax, of course you're not going to volunteer anymore. And in the famous quote, he said, if anybody in this country doesn't minimise their tax, they want their head read, because as a government, I can tell you, you're not spending it that well, that we should be donating more. So, it's true. I mean, I don't think any government all around the world spends taxes the way that they should be, because it's not their money.
Yeah. By its nature, there's an issue that we see all the time. It's spending someone else's money. It's the equivalent of, you have someone who works for a massive company and they're spending money on the corporate credit card. They're not going to be as careful around that as what they would be with their own money in their bank account. So I think and obviously the point of this podcast is not to say we should all be like Kerry Packer, we are all in that financial position. But I think that there's an interesting point that you touch on here, which is that one of the big part of our strategies that we look at with people is about how to minimise their tax. And so
absolutely,
most people immediately go, yes, that's what I want. I want to minimise my tax. I don't want to pay any more than I have to. And I think there are still some people who are sort of feel a bit unsure about that, and they kind of go, well, if I'm minimising tax, is that either A, legally wrong, or B, morally
wrong?
And so I guess my argument there, twofold for that, is that number one, it can't be legally wrong as long as you're not. If you are not following the law, then you are evading tax, and that is actually a crime, and that's right. Is a separate issue. But there are all sorts of regulations and rules and laws in place that set those rules for how much tax you have to pay. And the key there, I think, is that with the legal side of it, is that to bear in mind that there's a reason why those laws exist. And one of the things that I talk about with people is that if you look at why those laws exist, it's to incentivize certain behavior. And so a good example of that is when we talk about this with people of, concessional contributions to super. Why can I put money into super and I only get taxed at 15% versus if I don't put it into super, I pay 39% tax on it? And they kind of feel like and to some degree you are getting one up on the ATO, but what's actually happening there is that the Australian government wants you to be a self-funded retiree. And so it is setting the rules to incentivise you to save for your retirement.
Well, I had this very discussion with some new clients that agreed to go ahead with us yesterday. They're early 50s. They have $1.4 million in superannuation. And we're going to get them over the next 7 years to $2.8 million.
Yeah.
We talked about how we could actually fit them both in under the pension transfer balances.
Yeah.
So as a couple, let's just go back to that. If you're retiring today as a couple, you can have up to $3.4 million together in superannuation that you can move into a 0% taxed environment. What I said to them was that look, we're always subject to legislation changes here, and it's potentially at any stage, at any budget, the federal budget's coming up, we could have a legislation change that says, okay, well, there's going to be a rate of tax applied on that once you're in retirement now. I said to them, I think they'll leave you alone, and this is true of people in that category, because you're effectively in the middle here. You have too much where you'll never be a burden on the age pension, ever, unless you really, really mismanage your money. However, you don't have so much. You don't have so much
that you're going to die with $50 million that the government.
That's right. So, what the government doesn't know what it wants because it's a collection of individuals. But what I think the theme is that they want to tax people above that $3.4 million net asset threshold. And a lot of those people, if you get to $3.4 million, you're getting to 10, and then you're getting to 20. You're well above that figure.
The nature of compounding is that it's harder to actually spend 5% of $10 million than it is to spend 5% of $3 million.
So the government wants to tax those people. Let's assume. We don't know what the government wants, but let's assume they want to tax those people. They want to leave the people in the middle there alone. So we spoke.
And I guess this is again, I think, a point to say. It's not because, and again, there is no such thing as the government, the collection of individuals. It's not because there's any. It's not because any one individual feels like, it's mean to tax. It's just from a pure cost-benefit analysis. They look at it and go, if I can incentivize you to get to $3 million in retirement savings, you will continue to be able to draw on your own retirement savings. You will never be a drawing anything from the Centrelink system. There'll be no cost to the government for your retirement forever. So we want to incentivize you to get there, and we don't want to tax you too much, because all we're going to do then is if we tax you too much, then we're going to disincentivize other people to get to that point, and then we're going to draw down your retirement savings. Then you are going to have to, we're going to have to pay you Centrelink. So that's I think the point is, like, when you look at it that way, all those incentives, it's not because of any, it's not no one's sitting there, even though you'll see this in the run up to the election of people talking about the moral side of this is why this tax exists. And I think that's an interesting one where people feel like taxes are a thing where a government, the government as a person is going, you should get taxes.
Look, I have a comment on the moral side of things. The moral side of things, you always reserve the right to tax yourself. And what I mean by that is that if you think morally you should be paying 10% tax, let's say, for argument's sake, but legally you're in the situation where you have a great finance advisor that's put you in a 0% tax, you could tax yourself 10% and actually give that to your favourite charity or charities. So you can tax yourself from a moralistic point of view. If you're a member of a church, you may be paying already. You could look at worthy charity or charities. And say that you could tax yourself. You could do that at the end as well. You could always say, okay, my kids don't need any money because they're
as we by the time in our recent podcast about this.
By the time I plan to pass away, they'll be 65 anyway. So
they should be right.
So they should be right. So you could do it all at the end where you leave. You bequest your estate to charity. Look, there's many, many different ways that you can do that. What you're doing by legally harnessing a 0% tax rate is you're building up energy that will be deployed at some stage somewhere else. So you can have, from a moralistic point of view, you can really have some deep considerations about what you think you should be doing with that money, or that energy that's building up in the future. And there's any number of. I think everyone would probably agree to some extent the government doesn't deploy taxes as best they should.
No.
So there's some. So again, if you choose moralistically to tax yourself and say, okay, well, I'm paying 0% tax.
Yeah.
I'm going to set aside 10% for my favourite charity or this or that. What you're really doing is deploying the money in a better way than the collection of individuals that come together that we call the government is actually doing that.
Yeah, I couldn't agree more on both fronts there. And so that's, I think, from a moral point of view, that is exactly what I think it is. There are two completely separate issues here, which is the taxation system, and then there is, what do I owe the rest of society as a person who has been lucky enough to be born able-bodied, of able mind in Australia, and lucky enough to be interested in and the best financial planner in Australia, which is an industry that I will in the future get paid reasonably well for my skills and my attributes. There's a fair component of luck there, and so I can understand the moral thing of there are many people who just weren't lucky enough to be born in this place in this time with these attributes, with the of able body and mind. What responsibility do I have to them morally? And as a member of the human race, to me that's a completely separate issue to the taxation system, which is that, and I agree in that way that is something that I think that we've talked about this before, as a country, we don't give that much thought. We really don't think much about, okay, well, when the spare money that I have, what should I be doing with that? Should I be donating that to worthy causes? Should I be trying to use my time, money, energy to make the world a better place? I think that we probably don't do enough of that. But by the same token, sometimes I think the reason we don't do that is because we go, oh, the bloody government taxes me too much anyway, and it's their job. And I kind of get it's a bit of a cop-out, because the same people that will whinge about the government, not spending their money in a way that they would like to, won't get motivated to go and set in place a financial strategy that's going to minimise their lifetime tax bill, and it's going to allow them to build up substantial retirement savings and allow them to actually use that in a way that they do believe is going to be used best for society. So,
absolutely. And if you're a new listener to the podcast, or just as a refresher, leading up to retirement, what Dallas is talking about there is that a lot of people aren't actually even taking advantage of the money they can put into superannuation as a tax deductible or concessional contribution, which for a lot of people cuts their taxation rate down from 39% to 15% on the way in. And it's going into an environment that generally, when they're age 60 and over, they'll be able to actually convert into a 0% taxed income stream. So tax deduction on the way in, cutting down tax from your marginal rates of tax for a lot of people, that's 39% down to 15%. And then 0% tax on the way. So there's a lot of people that aren't even utilising that. And if you're new to the podcast, you'll hear many podcasts where we dive into that, of course, because that's the cornerstone building block of a good retirement plan.
That's, I think, a great point there as well, is that probably to articulate a bit more what I mean there is that I think that a part of the moral implication of minimising your taxes is that you kind of, there's two phrases that come to mind there. There's number one, which is better to be looking at it than looking for it. So I would rather minimise my tax and then get to retirement and go, oh, well, I've actually got a bit more money than what I needed. Given that we don't know what's going to happen with the investment markets, we don't know what's going to happen with tax legislation, we don't know what's going to happen in our personal life, we don't know what's going to happen with our ability to earn an income, we don't know what's going to happen with our family and their health and all those sorts of things. I would rather have more money than what I need and get to the point where I'm either at retirement or I'm, on my deathbed. I've got more money than what I need, and I then have that choice to make of, okay, well, I've got more than what I needed. Where do I deploy that? It's going to do the most good, rather than get to that point, realize that I don't have enough, and then I'm either a burden on someone else, or trying to get. I've taken care of the government by paying more taxes than probably what I needed to for the last 30 years, and then I'm trying to have a debate with them about how much they should pay me an age pension. I'm not going to win that debate. So that's the first, the thing that I'd say there is, that's really the way I think of it is. It's better to be looking at it than looking for it, and then the separate issue then of what do you feel is your moral responsibility.
Thank you for listening to the Money Over 50 podcast with Money Over 50 financial advisors. For more information and resources, visit the Money Over 50 website, mo50.com.au. We look forward to catching up again soon.